you have a practice or are you running a business? Valuation is the ultimate KPI.
Hey there, it's Mike Langford. Welcome to another episode of the Modern Financial Advisor Podcast, brought to you by Truelytics, the one and only comprehensive advisor transition management platform. You are going to love this episode. I know you are, because I have two of the most exciting entrepreneurs I've met in a long time on the show. I have Samir Vasavada and Runik Mehrotra from Vise. That's right, Vise.com, Vise.com. If you want to learn a little bit more before you dive in or after you dive into this podcast. Now, why am I so excited about Samir and Runik and the opportunity to share this story with you? Well, for starters, they're solving a real problem prevalent for many modern financial advisory businesses. And that is, what we need in this market is to have really efficient investment processes in our business. We've talked about that on this show a few different times, that as an example, model portfolios very often are valued more, if it's your investment process to have model portfolios, valued more than portfolio management solutions that really require a lot of manual hands-on stuff. So you're customizing every portfolio for each client. And the reason for that is, if somebody's ever going to buy your business, it's much easier to acquire a business where the investment process is relatively simple to port over to the new advisor's business, right? Or the new RIA firm's business. It's really easy to merge the companies afterwards and merge the processes. So we've talked about that a lot. But one of the challenges with today's model portfolios, as you'll hear Samir and Runik talk about more in depth, is they don't offer a lot of customization and they miss a lot of things that are really important and valuable to the client. And if you're an RIA or an independent financial advisor, you have a duty to render advice that is best for the client, to manage a portfolio that best suits the clients. And so when you think about some of the needs, and again, Samir and Runik will go through this, some of the needs of clients, they may have a high concentration due to their employee stock or their options. They may have some serious issues with investing in companies that are polluting the world. They may have some challenges with the political leanings of certain leadership at certain firms. They may want to see some improved diversity at certain companies. They may have a lot of things that they want out of their portfolio that aren't just by the numbers, right? But there may also be some things that they expect from an investment performance perspective that they're looking for that your traditional peanut butter model portfolio may not deliver. Long-winded way of saying Samir and Runik and the Vise team have solved that problem. And how have they done it? With artificial intelligence and machine learning. And we're going to go a little deeper, as deep as you want to go, really, on a podcast on that topic. But the long and the short of it is, they've devised technology that allows them to manage custom portfolios for your individual clients. But these custom portfolios are as easy to implement as a model portfolio. So still keeping your business really efficient while delivering really white glove boutique investment management for your clients. So you got to be excited about that. As if that wasn't enough, here's the kicker. Samir and Runik started Vise, at least as it is now, back when they were in college. A few years back, they were in college and they created Vise, and it's grown into what it is today. So these guys are like next level smart with this stuff. But as you'll hear, they're not just a couple of geeks who have a hard time talking to the real folks out there. No, they're not just staring at the screens. These guys are really personable. They know their stuff. They know advisors' business. They understand your clients because they have spent a lot of time talking to advisors, talking to clients about their needs, their preferences, their wants, their desires, their pain points, the things that work really well for them. And they've developed a really innovative solution. And along the way, they had to kind of make some adjustments to the business, as they kind of mentioned at one point in the pod. So really, really exciting stuff. I think you're going to get a lot out of this. These guys have been crushing AI stuff since they were 13 years old, actually. So they're kind of, we talk about digital natives. I guess you could call Samir and Runik AI natives. But anyway, you're going to love it. Okay. Before we jump into the program, as always, make sure you like and subscribe to the podcast. You can find it on Apple Podcasts, Spotify, Stitcher, SoundCloud, wherever you like to get your podcast jam on. If you have questions or suggestions for the show, hit us up at podcast@truelytics.com, or you can reach out to Truelytics on social. They're pretty much Truelytics everywhere. Make sure you add a comment and like and share this pod with a friend. I bet you somebody you know will be really interested in this one. Okay? All right. Without any further yammering on from me, let's get to it with Samir and Runik from Vise. Well, hey, Runik and Samir, it's fantastic to have you on the show. I've really been looking forward to this episode ever since we first got connected. So welcome to the Modern Financial Advisor podcast.
Yeah, thank you so much for having us. Really excited to be here.
Yeah, excited to be here, Mike. This is Runik.
Yeah, it's going to be fantastic. So I really think we are going to enlighten a lot of people who are the listeners of this show. We've grown the audience to be pretty big. And as I mentioned to you prior in planning, it's primarily executives at large broker-dealers, asset management firms, RIAs, and then, of course, individual financial advisors. And personally, I had never thought about some of the things that you guys are working on at Vise. So I thought the fun way to start this off was, when I thought of Vise, I described it in my mind as a customized portfolio that's as easy to implement as a model portfolio. How do I do on that? What do you guys think?
I would say that's a great way of describing it. Right? There's three things that I think we do great. Right? There's the ability to build highly personalized portfolios to clients, the ability to automate investment management so advisors can spend their time on what they care about, and then most importantly, provide intelligence, because I think one of the most important things a financial advisor does is educate their clients on the why behind their portfolio, their story. And we want to give that story to the advisor so they can explain, hey, not only is this portfolio customized to you, but here's why it's customized to you and how it's going to change as you change. So they really have that narrative and that story.
Yeah, I think you should join the marketing team, Mike. It's pretty good.
Well, I try to, I am famous for being able to kind of boil down things that are fairly complex, and make them sound a little simpler than they are. I know there's a lot of moving parts and a lot of brain power behind everything you're doing there at Vise.
Yeah.
Now, one of the things one of the reasons, that I wanted to make sure I had you on the show was because at Truelytics, the team really focuses a lot on how important the investment process is for RIAs and independent advisors, because, a lot of their long-term success in their business depends on the replicatability of their investment process, right? How easy is that process to replicate and implement for clients? It affects the efficiency of their business operations. It affects their ability to deliver on the promise of sound investment management to their clients. And of course, it affects the valuation and the attractiveness of their business for future M&A and succession planning. So I thought maybe we dive a little deeper into the concept of Vise and how it helps advisors and firms.
Yeah, of course. Happy to. I think the first thing to kind of start with is this idea that, finance is human, right? There's a reason why, the robo advisors didn't replace financial advisors. It's because the human relationship an advisor brings to a client just can't be replaced. And that's never going to be replaced. Rather, kind of the future of the space is the tools that empower that human to have a better relationship with their client, empower the advisor. So the way we saw it is, because finance is so personal, financial advice has to be personalized. The average financial advisor giving their clients the same generic portfolio of mutual funds, ETFs, investments that aren't really personalized to their needs, they're expensive, they're hard to manage, don't give the clients a reason to succeed. We wanted to take a look at, how could we factor in all of the different needs of the client to build a highly personalized portfolio to their needs. So for example, If a client works at Facebook and they have Facebook stock in their portfolio, you probably don't want exposure in your portfolio to Facebook, let alone technology, right? Or you're very environmentally conscious. You want to invest in only companies that do good for the environment. That should be factored into your portfolio strategies. And the advisors should be able to pick and choose and customize portfolios to every specific one of their clients' needs, rather than just a model strategy for a bucket of their clients, because that's not really personalized and it's not the service that most kind of clients expect from their advisor.
Yeah, I think it's interesting to break down like why did model portfolios come about in the first place? Because they're not that old of an invention. Over the last 20 or so years, we've seen a lot of assets kind of move to these model portfolio buckets where we have five specific portfolios or seven specific portfolios, and then you bucket clients into each one of those models. And those models have a set of managers in them. That's not a very old invention, even though we may see it as so today. The reason for that was exactly what you touched on: is the replicatability and scalability of an advisor's investment process is so important as they scale a business, prepare it for M&A, prepare to move that business on in terms of generational transfer, as one advisor retires and passes the business on to their kid. And so it's almost forced the industry to move in this direction of trying to generalize portfolios and clients into 5 to 7 buckets so that you can automate portfolio management and make it really easy. You only have 5 portfolios to manage, not 100. And then you have 20 clients per each of those portfolios if you have 100 total clients. But I think the next evolution here is around mass personalization. I think the replicatability and scalability of an advisor's practices is important, but we have to bring back the personalization that exists, and much better personalization today that accounts for all of those advisors' needs. So I think you hit that kind of the nail on the head around a customized portfolio that's as easy as a model portfolio. That's exactly what an advisor wants, right? Is your average advisor can't put in the time to build customized portfolios for each of their clients and scale their business at the exact same time. And I think that's what Vise helps them do.
You know, one of the things that I've experienced hearing from advisors is there's a bit of an anxiety at times with the model portfolio concept, just because they feel like the client is going to see through it, if you will. You're like, well, this is just an easy thing. You're just putting me in this bucket, pick one of 7 flavors. You can have any portfolio you want as long as it's one of these 7. And there's I guess, anxiety or whatever you want to call it, discomfort in that process. So the advisor feels like they have to justify their fee, that they're still providing uh, above and beyond advice and service and management. But one of the things that really attracted me to Vise and the way you described it is that level of customization. You can literally ask the client about all of their needs, all of their preferences, and make sure the portfolio reflects that, right? Of course, the portfolio, the end goal is to help it achieve the client's financial goals in life, right? But as you mentioned, there are some financial reasons why there might be some need to customize the portfolio, such as over concentration risk in tech or in one specific stock. But you also talked about a few other things, right? The desire for diversity at a company, or their environmental friendliness. How did you come about that thought process that this is something that needed to be?
I think before starting this business, we spent a lot of time talking to both advisors and I think what other businesses didn't do in their end clients. Because ultimately, advisors are providing an offering to their clients. And so it's important to provide a customized offering to the advisor, but their end client is the true customer. And end clients, kind of the key pieces of feedback we got. The first was end clients aren't nearly as involved in their finances as your average advisor wants them to be. And the reason for that is your average client doesn't necessarily understand all of these mutual funds, SMAs, third-party equity managers, how they function, how they work. And so you almost alienate your client with a more complex investment solution of multiple SMAs and things like that. And so we wanted to go back to the basics, invest in individual securities. We invest in individual stocks, true customization. We directly index for that client. We can, remove companies like Exxon and Chevron if the client cares a lot about the environment or only wants to invest in non-oil and gas companies, we can restrict that client's exposure to Facebook or Apple if that's the company they work in and they have options exposure. And so really I think that took us down the path of individual equities and managing individual equities, which isn't something that was really common, I think, when we started the business. And now that Schwab and TD have gone to zero commissions, I think it's even more compelling, and more people are stumbling upon that. The idea of direct indexing, investing in the underlying securities rather than a set of mutual fund managers or ETFs. So I think that was kind of the first key step.
Yeah, I mean, I think my favorite story about this and just how much it matters is we had an advisor. His name is Taylor, and he had said, like, I had been in these complicated funds before, and then once I was able to start using Vise and start doing individual stocks, my clients had this emotional reaction to my portfolios. Like they would get Disney stock or Pepsi stock in their portfolio, and they would start watching more Disney movies and drinking more Pepsi. With this emotional response that was coming from the clients that like you're not going to get out of iShares. And you just see how important, like, when the end client actually understands what they're investing in and then why they're investing in it, how that builds trust with the advisor.
That's a really interesting point that I hadn't thought of. The notion of look, index funds they're efficient, they're low cost and so forth. But to your point, they're kind of emotionless, right? There's a lack of connectivity to it. And there's a whole bunch of stuff in that fund that you may not want to invest in, as we covered. It could be Exxon or what have you. But also some stuff that you just have zero connection to and you don't even understand what you're investing in, right? It's a whole bunch of companies in the S&P 500 as an example that most Americans have either never heard of or have no genuine connection to in their life. But as you mentioned, whether it's a Disney or Apple or something like that, they get it and it resonates.
Yeah, I mean, you're buying a piece of the company. Like that's what you feel like, right? Like I'm buying a piece of Tesla. Like
Yeah,
okay to buy a Tesla.
that's fantastic. I love that. I love that.
I think a lot of managers skip over this idea of the client relationship and advisor education. Any financial advisor will tell you that almost first and foremost, their job is to educate their clients about personal financial management, investment management, all of these different pieces. And anything you can do to get your clients more involved in their finances and portfolio management and how we think about building and constructing portfolios is a huge win for advisors.
Yeah, I agree. It's almost a tragedy, if you will, that here in the United States, very few people have any level of education or comfort level with finances, particularly investing, right? That most Americans, even if they're very affluent, they didn't go to school and study finance or investing, right? They got really good at whatever they do. They might be a lawyer, they might be a developer, whatever it is, they just didn't study, investing. And so as a result, they go through a lot of their life feeling very uneasy about finances. And that's one of the roles of the advisor is to educate and make them feel more comfortable and then by extension, hopefully more confident in their finances.
Yeah, I mean, Runik and I were in Silicon Valley before this, and the vast majority of people, like even people in finance-oriented fields like venture capital, right, don't understand investing and like public markets investing. So I think there's going to be a place for financial advisors for a very long time.
Yeah, and I think that's what surprised us the most when we spent time talking to clients is across the board, regardless of net worth, between 250,000 and 10 million, the financial literacy remained nearly identical. Your average individual understood what a stock was, might have understood what a bond was, but did they understand mutual fund strategies or a value strategy or growth strategy? That was seldom the case. And so as much as you can, I think as much as an advisor can do to educate their clients, to build them a comprehensive financial plan, the better. And I think that's like the key value out of an advisor as well. A lot of what Silicon Valley missed, when they piled tons of money into robo-advice platforms was that financial advisors don't just build and manage portfolios for their clients. They actually spend a lot of time doing complicated financial planning, tax management, and financial literacy education. And it's really hard to replace those things, with technology. It's much easier to, I think, help advisors by automating the investment management part with technology, but really hard to replace financial literacy or relationship building with technology.
Yeah. I think another interesting story. One of the guys on our team, Rob, he was a former financial advisor. He said one of his clients' wife died in a car accident, right? Absolutely tragic. But Rob was the first call, right? Before the client called his kids or, other relatives, he called Rob. He's like, what should I do? Right? Like these people are like sometimes like the closest advisors, not just in your finances, but just in your lives, holding you accountable and making sure things stay on track. And just it's incredibly important.
I 100% agree. Back in my advisory days, I was called once a marital compromise
Yeah.
by the clients. And what I learned really early on and when I was an advisor was that one of your roles is to be somebody with a really good bedside manner, to listen to the client, to guide them, but also just be there when they need you. As you mentioned, with that anecdotal story there with the advisor whose wife tragically passed away, there is more to it than just running the numbers, right? You are helping people achieve their life goals, helping them navigate life, and money is certainly a tool for achieving a lot of things we want to achieve in life. But yeah, having that trusted advisor hat on is really, really important. So I thought we'd shift gears, and I'm going to kind of put you in that position a little bit for the advisors, because as you mentioned, the advisors feel their job is to educate and help the clients understand finances a little better. I thought it might be kind of fun to have you guys help the advisors who are listening understand artificial intelligence and machine learning a little bit, right? Because sometimes people are a little leery and nervous when they think of that black box algorithm operating on its own, doing a portfolio and so forth. So how does Vise work from a technical perspective? And I guess secondly, what's the logistical slash operational side? I mean, how do advisors implement Vise portfolios into their client accounts?
Yeah, I think the first, and I'll hand it off to Runik, is we're trying to unblack box, this approach to AI, right? Part of the approach in Vise is we want to provide the intelligence, the talking points, the why, so the advisor can explain the underlying portfolio decisions. So when our algorithm makes a decision, we have the relevant talking points for the advisor to explain to their client, here's why this is in your portfolio and why it matters, right? So they can kind of explain that story to their client. Runik.
And I think people are also a little bit freaked out by artificial intelligence. And I will admit, I don't think what we're building here is a HAL 9000 or a Terminator tool. I think, artificial intelligence becomes an umbrella term for machine learning technologies that make decisions based on data or learn based on data. And I think there's been a lot of progress in the investment management space in factor-based investing and almost like this mix of active versus passive approach. For a long time, we had these two very conflicting pieces of should you be completely passive and invest in index funds, or should you almost try to shoot for the fences a little bit, invest in active managers, try to generate alpha. And there's a little bit in the middle. I think there's a camp in the middle now that exists with the factor investing. If you look at companies like DFA that now have hundreds of billions, almost $1 trillion in assets that they manage, it's pretty clear that factor investing has gotten fairly popular since the advent of the FAMA French 3-factor model. Now we have a 4, 5, and the 6-factor model. Essentially, what we do on the artificial intelligence side is we feed kind of all the fundamental data we have on securities and let the machine learning algorithm choose the key factors. And what that allows us to do is determine expected returns for each of the securities that we have so that we can include those in client portfolios. So really we see AI almost as a prerequisite for customization because it's next to impossible to be able to directly index in a set of securities without a slightly more advanced approach to determine expected return than just using historical return or the capital assets pricing model. So I don't want to go too much into the weeds here. But machine learning is very much necessary to be able to provide each client their own customized offering and then manage each of those portfolios, right? To try to build exactly, I think, what you said and said really well, a customized portfolio that's as easy as a model portfolio. You almost need a monitoring system that's built around that portfolio as well, because if you have 100 customized portfolios, they each need to be monitored. And like what Samir said is, the whole point here is we need to provide key insights and explanations around the portfolio management. And that's kind of what we do with Vise and with portfolio intelligence, is to try to explain the why behind each of these decisions so it doesn't feel like a black box approach. And so far, I think that's gone really well. As we scale, we just want to do everything a little bit more intelligently. Something as simple as pulling cash out of an account. We can pull that out on a tax efficient manner more efficiently than your average platform or tool could do that. Rebalancing, tax loss harvesting, all these different pieces, we can handle and have built using, I would say, smarter technologies that automate a lot of these workflows for an advisor so they can spend more time in kind of all the things we've already talked about, like financial literacy and, spending time with their clients and things like that.
Yeah, I love that. Very early on in this podcast's run, I had a Jamie Wise of Buzz Indexes on the show. And Buzz Indexes is a stock index that is looking at sentiment data across the very large cap stocks that are traded and also talked about across social media and so forth. And the way he described it was kind of exactly what you were talking about. Like when you get so much data in there, it's really impossible for a human to look at it. But when you allow the machine learning to look at it and take into account all the sentiment data across what's being talked about on Twitter and blog posts and so forth, it becomes very recognizable in terms of the patterns and which ones have positive sentiment and which ones you should invest in. In your case, where you're modeling out all these portfolios, these custom portfolios for individual clients, and then an advisor may have 100, right? One advisor can't take into account all of those different moving pieces, but when you allow the computer to help out, it works.
Yeah, no, completely. I mean, I think it we can operate a lot faster and more efficient than a human can.
Yeah, yeah. Well, and I think many advisors are probably comfortable with that. I mean, they're all using some sort of financial planning solution, right? So that they don't have to do all the manual calculations themselves, right? They put some data in there and allow the financial planning software to do its thing, right? So this is just another extension of that.
I think financial advisors are completely okay with it and understand it and trust it when they realize not only kind of the inputs that are going into it, but how it works and what the output and the transparency into the model is, right? This idea of a black box scares people. And I think a mutual fund, to be honest, is more of a black box than this model, because a mutual fund doesn't give you kind of a customized intelligence, customized fact sheet to every client and every portfolio that's being invested in with the individual positions, right? Whereas, with a handful of SMA managers, don't exactly know where your exposure sits.
I think that's kind of what we've seen with advisors is almost always the clicking point is when they see the outputs and they're like, oh, I would have invested like that, or oh, that allocation makes sense to me. And it really is, we're not doing anything crazy different here. Our goal is the same amount of time it would take you. It would take an advisor maybe a few days to build a customized portfolio for their client, and that doesn't scale. You could do it for a few clients, 5 or 10, and some advisors build a business that way, but it's really difficult to do it for 100 or 200, or even 300 as you scale your business. And so we do the same thing that advisors do in terms of building customized portfolios for their clients, except we automate that, and it takes 40 seconds and not a few days.
That's really cool. So your site mentions that Vise is a sub-advisor platform that integrates with an advisor's favorite custodian. So at this time, is it mainly for RIAs using Vise, or are you seeing it across the independent broker-dealer model as well? How is it being rolled out to advisors?
Yeah, I think the IBD model would be really interesting. But right now, we're mostly focused on the independent RIAs, namely on the TD, Schwab, and then Fidelity, custodians, which I think is the vast majority of the market, where the client's account numbers don't necessarily change, their accounts stay the same, but we're taking discretion on the assets and making the trades on their behalf. So eventually we want to be able to plug into, a lot more custodians.
Yeah, the logistics here are essentially an advisor has a client at TD or Schwab, and they want Vise to manage that client's portfolio. They tell TD, they sign a couple of documents with us, and it gives us co-discretionary access. The assets don't leave TD. Like you said, talk to a lot of advisors and clients before starting the business. A friction point is account numbers changing. Clients hate when account numbers change; it alienates them. Advisors hate the repapering account process as well. And so we wanted to avoid that. And so we essentially onboard as a sub-advisor, as a co-discretionary manager, and then, as if an advisor was going in and trading on that portfolio, we do the exact same thing. It's automated. We auto execute trades and do all of the management in an automated manner. And the advisor can go in and see all of that and all of the results in TD or in our platform, right? It's their choice. So any integrations they have with a TD or a Schwab or a Fidelity remain the same with their financial planning tool or their CRM or anything like that. And we just sit on top of that.
That makes it really easy.
That's the goal.
Yeah, that's right. Exactly. One of the things that I think, I don't know, I had this question, and it's actually one of my favorite questions to ask any founding team members is, that Vise is a relatively new solution. And so along the startup process, there must have been a few surprises, right? Some of them positive, some of them negative, as you're building the product and then you're rolling it out and gaining steam in the marketplace. What have been some of the, oh, I didn't see that coming moments you've experienced so far?
I think the most exciting one, and the funny story to this is, Runik and I were having a discussion the night before, was when Charles Schwab went to zero commissions. Interactive Brokers went to zero commissions. And the night before, Runik and I went on a walk and we were talking about, what if when everyone was like Robinhood, like what if everyone was at zero commissions? Maybe I don't think that's going to happen, but maybe one day we can build our own custodian and go zero commissions, because we were doing individual stock-based investments, right? And no one really did this before, other than people just trading on Robinhood. So we were like, okay, our biggest expense as a company, right? The biggest complicating factor is the fact that we had to pay trading commissions, right? There's some degree of tax efficiency to it, but trading commissions are a real thing, right? And then Schwab, the next day went zero commission, and I think our whole business changed.
Yeah, I think it was really interesting because Samir and I had a long conversation about like what would happen in a world where trading commissions are zero, and how much more exciting that would make the approach to how we were thinking about investment management for sure, but also what that would do in the industry, and where we would see kind of shifts in the marketplace. And it's interesting because the following day, like 5 a.m, I got a message saying Charles Schwab goes to zero in trading commissions, and it erased kind of the only costs for the advisor or the client outside of the platform fee that we charge, or the asset management fee that we charge for their clients, and I think made direct indexing and investing in individual securities a lot more appealing. And so that was one of those like super surprised positives that we had. We were building this business prior to that, and just kind of a day later, we were like, wow, this is so much more compelling. And since then, we've had, on pretty much every demo, advisors have mentioned it on how exciting that is. I think an interesting, I don't want to say negative, but definitely a road bump was thinking through how we want to build the infrastructure of asset management so that it's not a ton of work for the financial advisor, or so that it's well structured. And I think that's a work in progress and will continue to get better. But early on, the advisor had to do trading execution on their own. It was really just initial portfolio recommendations and portfolio monitoring. And we weren't actually an asset management platform. And I think that's where we got a lot of pushback, where an advisor says, hey, I need you to go the extra mile. It would be amazing if you guys replaced my SMA or my mutual fund or any of these products rather than trying to assist them. And I think that was, we finally kind of took that next step last year. We became an RIA and an asset manager. But a lot of I think the roadblocks were around logistics of, how do you manage these assets? If you do, what are the compliance pieces that come with that, repapering accounts, My clients don't necessarily want to change account numbers. And so there was a lot to figure out there. And I think still is as we build and scale this business to make sure that we're limiting the amount of work for an advisor. If you ask me, like, what is my biggest fear about the business, is that advisors actually have a little bit of switching costs between managers and management platforms. And I think our goal is to reduce that switching cost as much as possible so that they can switch to the best possible platform as quick as possible. And the way that we do that, right now is around, better account management paperwork and things like that, but also a product feature that we call portfolio transition. And so that feature is really interesting. We actually take an existing portfolio and it could have anything in it, any positions or anything like that. And we actually we actually build a transition plan from that existing portfolio to a Vise portfolio that's tax efficient. And so the goal here is, can we save the advisor time? Your average SMA sells completely out of their existing portfolio into cash and then reinvests. We wanted to do that a little bit differently, try to create a tax efficient way of actually evolving this portfolio from what's existing to a Vise portfolio, and do it in a way that's completely automated for the advisor. And so when we rolled that feature out, we actually saw a lot more interest in terms of, okay, this isn't actually that hard to switch anymore. I don't have to do a ton of work up front. That makes Vise a lot more compelling. And I still think there's a lot of work we can do to make Vise more compelling and reduce switching costs, but we're always open to ideas.
I really like that. I mean, it's so true. I mean, in my experience over the years, particularly on the tech and marketing side, working with the wealth management space, there is always a healthy dose of "can you do it for me" from the advisors, right? And there's a variety of reasons for that. They're busy professionals. They're building their own business. They're interacting with their own clients. The notion of having to pick up another job, even if it's like, this is going to benefit my clients, you sending them recommendations and them having to manually do it was challenging, right? So you got that feedback. Can you help me do this? Can you do this for me? Was really important. And avoiding the shock and awe of, hey, we're ripping this Band-Aid off and radically transforming your portfolios, and giving the clients all, a little bit of an anxiety attack of like, hey, I thought we were doing it this way and now it's completely different. I kind of, as you were describing the process of gradually migrating the portfolio over, I thought of one of those digital pictures where you see it kind of gradually transform into something else over time. Like if you just keep looking at the picture and it's, frame by frame over several minutes turning into a different picture. And I think it's a really smart approach. It gets the clients comfortable with their portfolio gradually moving. And then, as you mentioned, there's some tax advantages to it as well.
Yeah, no, it's monetarily better for the client, right? Especially where we ran into this as an issue is clients that had existing positions for a long time that had significant taxable gains, and that advisor had no way of changing those positions or migrating a portfolio, because every SMA or equity manager or tool that they would use automatically sold everything into cash, hit that client with a huge tax bill, and then invested in, the specific investment products or securities they wanted to. And to be honest, we did that initially as well, right? I think that was just the industry standard and still is today. But I think it was important to try to build something better. And there are a lot of cases where that's the case. And so we've also built like a maximum capital gains indicator. And so you can say, I don't want my client to pay more than $5,000 or $7,000 in taxes this year as we transition this portfolio. And we'll do the requisite tax loss harvesting and wait on some of those positions to sell out until the following taxable year, so that we can keep that client under that taxable umbrella. So there is monetary advantages. I think there are psychological advantages with slowly moving that client over, and it's not a lot of work for the advisor. So I think really the focus here is it's almost a microcosm for like the benefits of AI in general. Is rather than trying to replace the most human aspects of what we're good at, which is relationship building, education, and thinking through kind of what the future holds, we can automate a lot of the analytical components that I think computers and technology are better at, is just like analyzing a lot of data, automatically monitoring a portfolio, transitioning it from one state to another. And that's kind of what we're trying to build here.
It's interesting that you notice this problem and others haven't, because I imagine that many clients are lost at a point of transition like you described, where everybody, take them to cash and then reinvest in the new portfolio modeling solution of choice, right? And if that new portfolio modeling of choice doesn't start producing results or looks worse to the client, and they paid all that taxes or they went through the pain in the butt of making the transition, that could be a point of friction for the client. And that's kind of a great segue into something that you guys kind of won my heart when I was looking through your website and I saw your attention to client retention. It's, client retention, in my experience, is one of the most overlooked things that a wealth management firm should be doing. Many advisors, obviously, well, all advisors want to keep their clients, but very often the primary focus is on top line, right? They want to win new clients and they want to expand share of wallet with their clients. They don't necessarily spend as much time thinking about, how do I make sure I keep my existing clients and avoid having a leaky bucket over time. So you mentioned retention is a core benefit of using Vise on the website. Can you expand on why you see Vise as a core retention tool?
Yeah, for sure. So in order to show, like, to retain clients, you need to show your clients you care, right? And you're staying on top of them. Right? The thing that makes clients most excited, right? And I think my dad's a great example of this, is when you get a message from your advisor. Hey, this thing happened in your portfolio. Here's what I think we should do about it. Or we made this change for you, right? Or I was thinking about you, and I think we should do this with your portfolio, right? It's showing that the advisor is looking out for you when you're not really looking. And I think Vise is an enabling function of this, right? When we're making a lot of these decisions on the back end, right, and sharing notifications with the advisor saying, hey, we've made this change, or we have this change has been made in the portfolio, it means a lot to the advisor, right? And more importantly, it means a lot to the client when they pass them on.
Makes sense. Makes sense a lot. This has really been a great conversation. I'm really excited to see how you guys grow Vise. I know there's been a lot of attention to it, and adoption has been going really rapidly for you. I'm sure many of the listeners on this episode are going to want to reach out and learn a little bit more. What's the best way for somebody to get in touch with you if they have more questions, they want to follow up, or just explore Vise for their firm?
Yeah, for sure. I think the best way is get a demo from our website. Just sign up for a demo and schedule a time with us. Or always, feel free to reach out to my personal email, which is sv@vise.com.
Very cool. You have the 2-letter email. It's awesome. That's great. I love it. Well, very cool. Samir, Runik, I really appreciate you having the both of you on the show. I learned a ton. I assume most of the listeners learned a lot as well. I really appreciate it. So thanks again. Appreciate it.
I really enjoyed it. Thank you so much for having us.
Thanks so much, Mike.
All right. As always, thank you very much for joining us for another episode of the Modern Financial Advisor podcast. And huge thanks to Samir and Runik for joining us as well. I learned a ton and really enjoyed the conversation. It's interesting. During the prep call for this episode, Samir and Runik asked me, hey, Mike, what keeps you so excited about this industry? You're still at it. And I guess they were kind of maybe age shaming me. Should I feel offended by this? Anyway, doesn't matter. They're like, what makes you so excited about the industry? And I said, it's startups like Vise. Here's the thing about the financial services and the fintech space that I love, particularly in the wealth management space. And I've been in this space since 1994. The thing to me is there's never a dull moment in this industry. Just when you think all the innovation is done, more is coming, right? Nobody thought that advisor transition management was going to have to be a thing. And it is, right? We know that 40% of advisors are going to be exiting the business in the next decade or so. And that means there's going to be a lot of new advisors having to come in. That means there's going to be a lot of mergers and acquisitions. There's going to be a lot of moving parts. You need solutions like Trulytics. Looking at portfolio management solutions, they need to get more efficient, right? Then you got startups like Vise coming in and creating new innovative solutions that go like, hey, you know what? The first wave of doing this was a little simplistic and it worked, but there's actually a better way. What if we use artificial intelligence and machine learning? We can do it a little better at scale. So there's always something new. And so it's the startup ecosystem that really keeps me excited. And then watching how the business moves and grows over time. So I hope you got a lot out of it. Like I said, this was wonderful for me. Okay, hope you're having a wonderful day. Until next time, please stay safe. Make sure you are wearing your mask, washing your hands, practicing social distancing. And please, as a favor to me, be nice to each other, okay? We'll see you next time on the Modern Financial Advisor Podcast. See ya. Bye.